Good afternoon, this is Adam Tuiaana with RJO Futures in Chicago, reporting to you this afternoon on your soft commodities markets for Wednesday, April 10th, 2013. Jumping right into the cocoa, we are anticipating the grindings, the European grinding totals that are actually due out next week, which are a very good barometer for us to be able to determine what the production or demand will be for chocolate throughout the Eurozone. The estimations for the grindings are anywhere between 1 to 5% decline from last year. But at the same time, we've heard some reports out there from some of the Eurozone confectionaries that their sales volumes have been higher than expected. So that could be a little bullish and support the market. When we look at the cocoa market from a technical perspective, we can see that here's my makeshift daily chart right here. You can see this has been in a steady downtrend, but we do have what could be a head and shoulders pattern right here. Your left shoulder, head, right shoulder. Then you have a neckline that's right here sitting at about 2200. This area has been breached and is looking kind of to hold support above that neckline. So if we do a really quick measurement of this head and shoulders pattern from the top of the head down to the neckline, that can give us an upside measuring objective to somewhere in the area of 2350-ish. So we're monitoring that 2200 level pretty closely. For the time being, we're kind of sidelined right now, just watching in front of this grindings report how everything's going to work out. So on the upside, of course, 2200 is the resistance area to monitor. On the downside, 2111 is going to be our critical support. Moving over to coffee, which last traded at 135.90 in the May contract, puts it up 55 ticks on the day. There has been a very strong equities market. The S&P was actually up about 30 points over the past few trading days, so very impressive. But at the same time, we're seeing some weakness, continued weakness in the coffee market. So not really lending a lot of support from the equity side, which is actually very bearish. So that's likely due to a large Brazilian and Colombian crop that's been out there. It's putting a lot of pressure on the coffee market. We're not getting the Roya fungus scares that we thought we would have to kind of support this market. So I'm continued bearish in the short term on coffee. Upside resistance is going to come in at 135.50, and downside critical support, which hasn't been seen since November 12th, it's going to find itself somewhere around the 132.05 area, so monitor that for your critical support. Moving over to cotton, which last traded 85.31, which puts cotton up 61 on the day in the May contract. I had been bullish, I'll say, but for the past 4 consecutive trading days, with the exception of today, the cotton market has really taken a hit. There is reported less commercial mills that are actually buying cotton out there, so that's added some pressure onto the cotton market. You also at the same time had some longs that were taking profits. There has been a very big violation of a critical support area, which was 85.59 in that May contract. So for the time being, I'm short-term bearish on cotton. Do I think it can rebound? Of course I do. I think it's got a good global demand for it long-term, but right now I'm short-term bearish. Near-term support's going to come in at 84.38, while on the upside resistance, for those that still want to be bullish, monitor that 89.70 area, 89.70. Finally, moving over to sugar, last trade at 17.87, which puts it up 15 ticks in the May contract. A pretty large outlook for the Brazilian cane crop. In fact, it's been reported to be a record high outlook for Brazil. That on top of a few years of huge surplus of sugar has me continued bearish. Sugar will really need some solid fundamental support in order to turn this ship around and rebound from this downtrend that it's been in. So 1747 is going to be that critical support area on the downside, while on the upside we'll just monitor for kind of a psychological resistance level, the 1800 level as far as your resistance goes. So and that is in fact if you still want to call a bottom to a falling market, which I don't think is going to happen anytime soon with sugar. So if you do have any questions, or you want some strategies, or you just want some basic knowledge of futures or how to trade futures, my name is Adam. You can reach me right here, and my number's on the bottom of the screen right here. You can email me. I'll be more than happy to help you. Please keep in mind that futures trading does present some risk, and it is not suitable for all investors out there. That being said, have a great afternoon.